Welcome to our today lesson. Our today lesson is one of the most important lesson, and today we'll teach you how to trade Forex professionally. So please stay with me until the end of this lesson, and I do promise you, you will not become regret of consuming your time for watching this video until the end. So if you are a Forex trader, this lesson is very necessary for you, or especially if you are a beginner. So prior we start our today lessons, I will let you know about our previous lesson that we have started and I uploaded in this channel, and you can watch them. In the part 1, we already have started the lesson 1, what is Forex and Forex history, lesson 2, Forex characteristics, lesson 3, how much Forex traders can make, lesson 4, Forex working hours. Part 2, and in this part we already have studied online trading and brokerage important terms, lesson 6, how brokerage and online trading works, lesson 7, how to choose the right broker. It's very important lessons. If you have missed this lesson, I have mentioned this link in the description below. Please watch this lesson. No matter if you are a professional trader or expert trader, but if you are not dealing with the right broker, it is useless and you will lose everything you have. It's very important lesson. Lesson 8, what a lot, pip, and how to calculate pips in Forex. This is also important lesson. If you have missed, so please watch that lesson. Part 3, and in this part we already have taught the lesson 9, which is the basic concept of Forex, price ask, bid and spread. Lesson 10, which is our today lesson, it's about how to trade professionally, and we'll teach you how to place order, stop loss and take profit properly and professionally, and also we'll teach you how to apply trading checklist in your trading. This is very important, and today we'll teach you how to apply a very famous trading checklist that every professional trader apply that on their trading before they place any order. So let's start. Chapter 2, lesson 10, content. So in this lesson you will learn the following: 1, what is order; 2, how to apply trading checklist; 3, what are stop loss and take profit; lesson 4, what is risk and reward ratio; 5, how to place order, stop loss and take profit professionally. So today we'll apply all of these in the live market. So please stay with me until the end of this lesson. So before we jump to the market, please don't forget subscribe to our channel, hit the bell, and don't forget the like to not miss our most important coming lessons. So here I will give you some brief informations about what is order. Order is to buy or sell a security at a specific price. Most of you guys might know about the order, but I briefly explain that for newcomers or beginners. So order types. There are 2 types of order. 1, market order or instant execution. Second is pending order. So in the market order we have buy or sell. So we can easily buy or sell any currency pair. But in the pending order we have many types of order. Sell limit, buy limit, sell stop, buy stop limit, and sell stop limit. So no worries, we'll teach you the all in detail and we'll apply that in a live market, and you will see how we are applying in our trade daily. So for today we'll go to the market order. So what is market order? A market order is an order to buy or sell a security immediately at the best available current price. It is the most common types of order used by traders who want to enter or exit a position quickly. Market orders are filled at the best available price, but the trader may not get the exact price they wanted because of slippage, and in the coming lessons we'll teach you what is slippage. Buying and selling in Forex is speculating on the upward and downward price movement of a currency pair with the hopes of making a profit. All Forex trading involves buying one currency and selling another, which is why it is quoted in pairs. You would buy the pair if you expected the base currency to strengthen against the quote currency, and you would sell if you will expected it to do the opposite. So if you don't know about the quote and base currency pairs, no worries, we already have taught that in the previous lesson. I have mentioned its link in the description below, so kindly watch that lesson, which is about the currency pair and currency quote in Forex. So now I'm sure you already got a brief information about the order and types of order. So now we are directly jump to the market. So this is the live market, and today I'm going to trade Euro USD, and in this chart I'm using the daily candles. So it means that any candle you see here, the red and blue colors. It has taken 24 hours until it gets closed, and it's called daily candle. In my strategy, I always analyze the market as per daily candles. So that's why you can see here on the right side, I'm using the daily, not the other time frame. So now I have no idea which direction the market will move. It will go to the up or it will go down. So most of you guys, when you open a market, so you have also no idea which side the market will move. So now how we should determine which side the market will move, up, down, or none of them. So for understanding this, we need to refer to our checklist, and this is very important that we should have a checklist and apply our checklist in any trade. So before we place an order, we have to refer to our checklist. So here is the very famous checklist. 1. Is the market trending or ranging? First, you have to understand what types of market we are in, trending or ranging. Second, is there a significant level of support or resistance nearby? After we found out that the market is trending or ranging, then we have to understand about the closest resistance and support, that we can use that as our take profit and stop loss as well. 3. Is the trade confirmed by an indicator? After that, we have to confirm our trade by any indicators. 4. What is the risk to reward ratio? So we also should know that how much we are going to risk and how much we are supposed to gain. There should be a good risk and reward ratio. And the 5th, we have to know how much capital we are going to risk. 6, we have to know, are there a significant economic release? At the time that we are trading, we should know about this as well. And the 7th, am I following the trading plan? So these are the most important trading checklist. So today I'm going to apply all of this checklist one by one in a live trade for you, so that you should understand and you should learn how professional traders trade. So let's go back to our trade. So here we have to understand that what types of market we are in now, is trending or ranging. So if you don't know about the trending and ranging of the market, no worries. Briefly, I will teach you here right away. So for that purpose, I will come here at the AUD/USD, Australian US dollar chart. So here I will use the trend line. First, I will draw a trend line from here up to downside, which is called bear or downtrend line. So if you don't know how to draw a trend line or how to apply it, no worries. In the coming lessons, we'll teach you in detail what are types of trend line, how to draw trend lines, what are trend lines, trading strategies. We'll teach you all how to apply them professionally in your trading strategies and plan. If you would like to watch those lessons for free, only subscribe to our channel now. So then I will draw another trend line from lowest price of bear trend. So this trend is going to be called the bull or up trend. So for now, you learn two types of trend. One is bear or down trend, another one is bull or up trend. So now I will specify the highest and lowest date and times of this trend line, and I will use this vertical line here. Click. So here the highest price in this trend was at the 5th of 2022. Then the lowest price was at the 13th of 2022. So this downtrend almost took 6 months. So it means that our bear trend or downtrend was continuing for 6 months. So here in the bull and correction trends, I will apply a vertical line here on the bull trend breakdown. So the bull trend is breakdown at the 24 February 2023. So this bull trend line almost has taken 4 months. So during the 4 months, the market was in a bull or up trend. So after the bull trend breakdowns at the 24 February of 2023, the market has not moved in any clear directions, up or down. So it only have moved in the sideways. So again, I will draw one vertical line here to know for how much times the market has moved in a sideways. At the current price, which is in the 9th of June 2023, which is today, and after the price is broke down here, so the market moves in a sideways, and this types of movement is called ranging. And this ranging trend in Australian US dollar almost has took 3.5 months. So it means that after the bull or uptrend breakdowns at 24 February 2023, up to date, the market is in a ranging or moving in a sideways, not in a clear uptrend or in downtrend. So this is called ranging. So now you understand the three types of trade, which is uptrend, downtrend, and ranging. So it's very necessary prior you trade, you have to understand what types of trend you are going to trade. Is it up, down, or ranging? Because trading in a ranging market has its own strategies, and you cannot apply the ranging market strategies in a downtrend market, or you cannot apply the uptrend market strategies in a downtrend. So that's why you have to determine first the types of the market trends. And also you should remember one thing more as well. While you are trading in a lengthy up or down trend line, so always there is up and down trend inside that big trend. For example, here in the 6-month trend, you see here at this side, we have the one small downtrend, then uptrend, then down, then up, and again downtrend. And this is the main opportunities that we can trade in a trend market. So in the coming lessons, we will teach you all how to draw trend line, how to use the small movement during the one big trend. So now you already learned the types of trends. We'll go back to EURUSD to our trade. So here, now we have to understand that what is the EURUSD market now? Is it trending or ranging? So for understanding that, first I will zoom out the market. So here in this chart you see the price from March 2021 up to June 2023. So I will use the same technique. I will draw a trend line from here up to down, from highest price to down, and then I will specify the period of this trend by using the vertical line. So here I will draw a vertical line which is at the 24/5 2021, and the lowest price is at 28/9 of 2023, and this period took 16 months. So it means that the EURUSD was in a bear or downtrend for 16 months. So if you already was here and you understand that the market is in a bear, so any times when the market was going up, so in any market correction there was a good opportunity for sale. So we could sell in any these correction opportunities. So as you see, this market trend took 16 months until the market broke up here, and this area is called 16-month downtrend breakout. Then I will draw another trend line from the lowest price, which was under the $1, to our current price. So here you see this trend line, which is uptrend. So now it shows that the market is trending, because here you see that we are on the uptrend and the market not move sideways. It's not ranging. It is moving on the trend. It might be an uptrend or it might be a correction trend, but it has a clear movement which is going up. So now after I understand that the market is trending and our trend is to the upward, then I will give one plus sign to the upside. So now I understand that the market might go up, but still I'm not sure. So I have to refer back to the checklist. Is there a significant level of support and resistance nearby? Now I have to determine the closest support and resistance in my entry point, which is the current price. So if you don't know about the support and resistance, it's okay. Briefly, I will explain here in this part. What are support and resistance? Support is the area on the price chart that indicates traders willing to buy. Resistance is the area on the chart that demand exceeds the supply. So this is the brief definitions of the support and resistance. If you don't know the resistance and support still it's okay. Only you need to subscribe to our channel. In the coming lessons, we'll teach in very details how to trade on the support and resistance, what are the strategies of trading resistance and support. So this is very, very important lessons of the Forex to understand the resistance and support. So no worries, we'll teach you all. So now you briefly understand about the support and resistance, then I have to go back to our trade. So for finding the closest support and resistance nearby, I will zoom in the chart. Now I will look for the closest support and resistance. So here you see the uptrend. This trend also has acted as a support here, because when the price reached to this uptrend, so it bounced back to the upside. So it means that this uptrend acted as a support for us. But I will look for another closest support level as well. So here you see here this candles. So at the top of these candles could be our closest support level. I will use this line to draw a support level. So this is our closest support, and then I will look for our closest resistance. So here, if you see here this candle, so it shows that here could be a strong resistance, because when the price reached to this level, it bounced back to the downside for a significant times. So I will draw another line here to specify the closest resistance. So here it is our closest resistance. So after we specified the closest support and resistance, then the other important part is to refer the candlestick charting or candlestick patterns. This is very important because it helps us to understand that are we on the right times of trade. Candlestick charting analysis will help you to understand the accurate entry times or accurate entry opportunities on the market. So here in the candlestick analysis, it shows that it's morning star exactly on the support level. So this shows that the next move in the market will be to the upside. So now I will give another plus sign to my upside. So now the reason that I have put 2 plus sign on the upside is, one, the market bounced back from the trend line and the closest support. Formation of the morning star, it indicates that the market will go up in the next move. And here the small red candle that you see here is our current price. So as it's in the daily candle, so you cannot see the movement so quickly. So as I have 2 plus signs to the upside and I have no any signs that the market will go down, so then I will only focus on the upside and remove the speculations of the price to the downside. I only focus to the upside. So now in the second stage of our checklist, we already found out that the market might go to the upside. I will not place any order here, and I will refer to my checklist. Is the trade confirmed by an indicator or not? This is very important. I have to understand that if the trade is confirmed by indicator or not. I will not rely only to the support and resistance level or only a candlestick. And I need to confirm that by indicator as well, that the next move will be to the upside. So mostly in my trading strategies, I'm combining 5 types of indicators. 1, trend line. 2, candlestick pattern. 3, RSI. 4, 200 daily simple moving average, and 14 days moving average. So up to this times, we already applied the trend line, which was okay and shows that the market will go up, and in the candlestick pattern also confirm that the market will go up. So here this is the RSI tool that I'm applying in my trade. Here you can see here these 2 dash line here and above and the top here. If the RSI cross this line to the upside, it will be overbought, and if it's crossed to the downside, it will be oversell. So here the RSI shows that the market is not in the overbought or oversell. So it shows that the market is going to get more momentum and we are on the right place according to the RSI as well. So now the RSI also giving me a go signal to the upside. So the other 2 remaining indicators are the moving average. So first I will apply the moving average 200 or 200 simple daily moving average. On the toolbar, click on the insert. After that, click on the indicator, then come to the trend line, and after that click on the moving average. So then here change the period to the 200, and then here on the method make sure that it's the simple, because here are 4 types of moving average: simple moving average, exponential moving average, smoothed moving average, and linear weighted moving average. So in this specific trade I will use the simple moving average here, and after that here I will choose the color for 200 moving average. So mostly I will prefer to use this color. So you can choose any types of color, but make sure always you will use the same color for 200 moving average or for any moving average that you are using. Or you change always the colors, so it might confuse you while you are trading, because most of the time you might use many different types of moving average. So that's why try to use one specific color for any types of moving average and for any period times of moving average. So after that, for 200 moving average, I will use the ticker line. So here, come at the right side, click here, and I will choose the ticker line and then OK. So now the 200 moving average is already applied. So why I applied this 200 moving average here in this trade as a indicator? Because I need to confirm my trend, which is the uptrend market. Look here, 200 moving average. When the price moved under this 200 moving average, it was for long period of times under the 200 moving average. So it means that the market was in a downtrend. So here the market crossed above the 200 moving average, and still it's above 200 moving average. It means that the market is on an uptrend. This indicator also supports my trend line. The trend line already indicated that the market is trending and it's toward upside. And the moving average 200 also says that the market is on the uptrend. So that's why for better result and for better confidence, we have to combine many indicators. So that's why in my trade mostly I combine 5 to 6 types of indicators. So the last one that I have to apply is the 14 moving average as a indicator. So I will use the same method. Click here on the insert, moving average, and then change the time to 14. Then here change the color. So I will choose the red color, and then I will change the thickness. So I will make it thinner one, then OK. So now the 14 moving average is also applied on the chart. So I will tick mark the 14 in my indicator combination as well. So now why I applied the 14-day moving average. So I have to zoom in. Here you can see the 200 moving average, the support and uptrend, and also the resistance. And here is the moving average 14 or 14 days simple moving average. So this helped me to find a good entry point. So here you see that this blue candle is closed above the 14 days moving average and indicate that this moving average has broken to the upside and the next move could be higher, and we are really close to this moving average. And also you see here when the price crossed the moving average to the downside, so the price was moving down for almost 300 pips or higher. Even if there is a uptrend, but still the market might go up and down in a significant pips amount. Or here when the price crossed the 14 days moving average, and after that for long times it was to the upside. So that's why I need to confirm my entry positions and my entry price by 14 days simple moving average as well. So after third stage in the trading checklist, that the trade is confirmed by indicator as well, again I will not place any order. It means I will not buy. Again I will refer to the checklist. 4. What is risk to reward ratio? This is also very important. We already found that we are in the good place for entry in the market, but still we don't know the risk reward ratio for this trade. So if you don't know what is the risk and reward ratio, briefly I will explain that for you here. What is the risk to reward ratio? The risk to reward ratio is the ratio of number of pips traders will risk in the hopes of reaching the target. Risk and reward ratio 1 to 2. This is the bad risk and reward ratio because your risk and reward ratio is 50-50. For instance, you are going to risk $50 to make $50. So this is a bad risk and reward ratio. Never trade. Once again, I'm repeating, never trade in the 1 to 2 risk reward ratio. Second types of risk and reward ratio, which is 1 to 3. It means that you are going to risk 1 to make 2. So this is fair, but not good. For instance, you are going to risk $50 to make $100. So this is fair, but this is not still good. But if you are going to apply the risk reward ratio of 1 to 4, so it is good. It means that you are going to risk $50 to make $150. But if your risk and reward ratio is more than 1 to 4, so it is excellent risk and reward ratio. So try always at least apply the good risk and reward ratio 1 to 4. So now let's jump to our trade, how to calculate the risk and reward ratio. There is one thing that the risk and reward ratio will be applied while that you are placing your take profit and stop loss. So exactly the meaning of risk and reward ratio is that where you place your take profit and where you place your stop loss. So the risk is your stop loss. It means that the level that you are closing your trade in a loss, and take profit is your reward. So if you risk and your risk level is 1 and your reward is 3, so it's a good risk and reward. So if you don't know about the stop loss and take profit, no worry, I will explain that here briefly as well. What are stop loss and take profit? 1. A stop loss is determined as an order that you send to your broker, instructing them to limit the losses on a particular open position or trade. So let me give you an example. So this is a USD CAD chart. So now here I'm going to place an order. So this is the support that the price are now above the support line, and here is the resistance that the price is lower than the closest resistance. So according to this support and resistance, so I will going to place an order. As the price is close to the support level and it shows that the price here has bounced back from the support level, so I think that the price might go up. So I'm going to place a buy order. And also I'm going to place my stop loss exactly here on the support level, which is lower than the current price, which is 50 pips lower than the current price. And in the above side 180 pips higher on the resistance area, I will place my take profit. And then I'm going to place my order. So here I placed my order, which is 0.2 lot. I already assume that the market might go up, placed my take profit 180 pips higher than the current price. So I will wait for the market that what will happen on the next days. See, unfortunately, the market hit my stop loss and I lost 50 pips. If I did not place the stop loss, you know what might happen to me now. Today I had to lose 176 pips. So the stop loss saved me from bigger loss. If there was not a stop loss, so today I had to lose 3 times more than the 50 pips. So that's why the stop loss is very important in the forex trading. You should always place your stop loss and respect your stop loss. Don't change time to time the stop loss. Respect the stop loss, no matter if your trade hit the stop loss. Don't fall in love with your trade. Respect the stop loss. But if you don't know how to activate the stop loss from the trading platform, don't worry. In this lesson, you will see how we apply the stop loss and take profit, and we'll apply that in this trade. So now you understand what is the stop loss. Second, a take profit or TP is an order that you send your broker in same regard as a stop loss, notifying them to close your positions or trade when a certain price reaches as a specified price level in profit. So how it works? So here in this example you see. Now here in the USD CAD, so the current price is 1.36953. So now I'm going to trade. First I will determine the support and resistance level. So already the support and resistance level is applied. So then I will use the trend line. So here you see that the trend line is also broken down and the price is closed under the resistance. So many times it crossed the resistance. It indicates that the market might go down. And also in the candlestick patterns also shows me hanging man and hammer. So the trend line, the support and resistance, and the candlesticks telling me that the price will go down. So I sell 0.2 lot at 135.152. Then placing my stop loss and take profit. So I will place my stop loss higher than the current price, which is 50 pips higher than the current price, above the hammer patterns. And then I will place my take profit here at the support line 2, which is around 223 pips lower than the current price. Then I will wait for the market. So as for I'm using the daily candle, so I would prefer to wait for many days. Wow. So see, the price hit my take profit. So it means that I made 223 pips profit. So even if it was offline, even if I had not access to my trading platform, so the system automatically closed my trade in a profit. So that's why always use the stop loss and take profit, because it will act on behalf of you even if you are not online. So now you understand the risk and reward ratio, you understand the stop loss and take profit as well. So go back to our trade. So now I will specify the support and resistance level that I can be able to calculate the risk and reward ratio. So here in the support line I will specify my stop loss. In the closest resistance I will place my take profit. This is also part of my strategy, that I place my stop loss on the closest support level and I will place my take profit on the closest resistance. So after I specified the take profit and stop loss level, then I'm going to calculate the risk and reward ratio amount. So this is very important. I'm not trade until I don't know the risk and reward ratio. Now I will use this cross here to determine the pips amount from the current exchange rate to the closest support or to our stop loss level. So click on the current price and drag it up to the support, closest support or our stop loss. So I need to determine that in this stop loss level how many pips I might lose if the market will not go in my desired direction. So here is some information in the crosshair. It shows 847 points, but according to the pips, it will be 84.7 pips or 85 pips. So always keep in your mind that do not be confused. It is not 847 pips. It is 847 points or 84.7 or 85 pips. So if you don't know how to calculate the pips value and lot size, I already have taught that in the previous lessons, and I have mentioned its link in the description below. How to calculate the pips value and lots in Forex. And here at the right side, it shows the percentage that my stop loss is minus 0.79% lower than the current price. And according to the pip, my stop loss is 85 pips lower than the current price. In the left side, this number, it shows the required price that is changeable. You can change that in any locations that you like or that you will prefer. So I will zoom this area that you can see it more clear. So here in the left side, this is the percentage and this is the points, and the left side is the required price. And you should not consider the points as a pip. In pip, eliminate the last number in point. In the same method, now we will find the pips amount from current price to the closest resistance or our take profit level, and it will show us that how many pips we are supposed to make a profit. Here in the take profit, it shows 238 pips. You see here the take profit level from the current price is higher, 238 pips. So here I will determine the risk and reward ratio according to the pip from the current rate. So here this is our current rate, and my stop loss from the current rate is 85 pips, which is the risk, and my take profit from the current price is 238 pips. So it means that I'm going to risk 85 pips to make 238 pips. So according to the risk and reward ratio, it is in 1 to 4 risk and reward ratio. It means that I'm going to risk 1 and I will make more than 3. So it's a good risk and reward ratio. It is not a bad or fair. It's a good one. So then I will take in my trading checklist as well that the risk and reward ratio is also okay. So again, I will not place any order and I will refer back to my checklist. Number 5, how much capital am I risking? So till now you already understand that I am going to risk 85 pips and I will make 238 pips. But according to the capital, I need to understand that how much money I am going to risk, because I need to compare that risk with the total amount of my balance or capital. So for calculating the risk or reward capitals in trade, we will use the following formula. Risk amount. Risk in pips divided by current exchange rate times lot times 10. This is the formula for calculating the risk amount. And for reward amount, we'll use the same formula. Reward in pips divided by current exchange rate times lot times 10. So always remember this formula for calculating your risk and reward amount. So in our today trade, which is going to trade Euro USD, we have the following risk and reward ratio as per pips that we already determined that. 1. Risk in pips is 85 pips. Reward in pips is 238 pips. Trade volume 0.2 lot. And my balance is $10,636 US dollar. And the current exchange rate is 1.0747. But still, here is one other important formula as well. That this formula shows the risk per capital in percentage, which is equal to risk amount divided by balance times 100. Note, the total risk per capital or balance shouldn't be higher than 2%. So now I'm going to apply this formula in my today trade. First, I have to find the risk amount, which is equal to the risk in pips, which is 85 pips, current exchange rate, which is 1.0747, times lot amount, which is 0.2, and times 10, which is from formula. So the risk amount is 158 euro. So if I'm going to risk 85 pips in a volume of 0.2 lots, so I will lose 158 euro. So the reason that the unit is euro, because in Euro USD, the euro is the base currency. So if you don't know about the code and base currency, I already have explained this in the previous lessons on the pips and lots volume calculations, which I've mentioned this link in the description below as well. So now I have to change the euro amount to US dollar. So risk amount in US dollar, it will be the risk amount in euro 158 times to the current exchange rate which is 170 US dollar. So according to the current price, 158 euro will be 170 US dollar. Then I will calculate my reward amount, which is equal to the reward in pips, which is 238 pips, divided by current exchange rate, which is 10747 times lot amount 0.2 times 10, which is from the formula. And my reward will be 443 euro. As per dollar, reward amount will be 476 US dollar. So it means that I'm going to risk 170 US dollar to make 476 dollar. Still, this is a good risk and reward ratio, but I need to find the percentage of this risk as per my overall balance. So I will use this formula. Risk per capital in percentage is equal to the risk amount divided by total balance times 100, which is 1.59%. The total risk per balance in our trade is lower than 2%. So it means we have proper volume and risk to reward ratio. So now you understand that only risk and reward ratio calculation as per pips is not the last answer. So you have to find the risk and reward amount as well, and then compare that to your total budget. So if it exceeds more than 2% of your overall trade, it means that your volume or your risk amount is very high. You should not approach to that trade. Always your risk compared to your overall budget should be lower than 2%. So if your calculation shows that the amount of your risk is higher than 2% of your total capital, it means that risk order level is not proper or your volume is high. So change that and recalculate. Calculations. After we've done the risk per capital percentage calculations, so we'll refer back to our trading checklist, because there is two other important elements still remain that we have to apply before placing our order. So in our trading checklist, we already have applied. So till this time, we already have applied 5 important elements and parts of our trading checklist. But still there are 2 other importance that we have to apply in our market analysis prior placing our order. Number 6. Are there any significant economic release? This is very important because all our market analysis was based as per technical tools and factors. We have not considered any fundamental factors in our market analysis. So that's why we have to see the economic data release calendar. So let me give you a brief information about the significant economic data. What are economic data or indicator? Economic indicator are key pieces of data that are released in order to give insight into the performance of country's economy. So as we have mentioned earlier, that all our analysis in this trade totally was based as per technical tools and elements. We have not considered any fundamental data or factors. So as the fundamental analysis is very important because it might affect entire the trend. So at the date or the time that the economic data are released, we have to close all our open positions and do not approach to any new trade until the data is released and the market turbulence subside and calm down. So this is very important. Anytime you trade, do not forget to check all your checklist items, and especially the number 6 item, which is about the economic data release. So if the time or the day that you are supposed to trade, but there is an important fundamental data release, stop trading. If you have any open position, close it right away prior the data get released. So here are some significant economic data which can affect the entire technical trend. 1. Interest rate decision. 2. Central bank policies. 3. Inflation data. 4. Gross domestic product or GDP. Non-farm payroll or NFP. Unemployment rate. Consumer confidence index. Industrial production index. So these are some of the most important fundamental data or economic indicators data. So some of them might be so strong and some of them might affect lesser the market, and we'll teach you the all in the fundamental market analysis. So after you learn the market fundamental analysis, that times we'll teach you how to combine the technical and fundamental analysis to get more confidence and accurate result from the market movement. And also it will help you to have a good prediction from the market future movement. So if your market analysis only based as per technical tools and elements, so be very careful while there is a important economic data release time. So today in our trade, so as I referred to the economic calendar, so there wasn't any most important economic data release that be able to affect the entire trend or can affect my technical analysis. So after I pass this part of checklist, I will get closer to place my order. So number 7, am I following the trading plan? So this is the last item from my checklist. So this is also important that the trade that today that I'm going to place is as per my plan or not. So in this part, I don't want to make this class become too lengthy. So I will explain the
trading plan in separate lesson, and I will teach you how to develop your plan, how to make your plan, and how to apply that plan on your daily trading. So please follow our courses, subscribe to our channel. We'll teach you the all for free. You do not have to pay any single penny. So before we are placing our order, briefly reviewing our trading checklist for the last time. 1. Is the market trending or ranging? So we'll see here that the market is bull or uptrend. Second, is there a significant level of support or resistance nearby? So already we found out that there is 2 support. And also here we already have our resistance. 3. Is the trade confirmed by an indicator? So already we have applied the moving average 200, the moving average 14, and also we already applied the RSI oscillators as well. 4. What is the risk to reward ratio? So we already have allocated our sell or sell stop, which is 85 pips, which called the risk. We already specified our take profit as well, which is 238 pips. 5th, how much capital am I risking? We already calculate the risk amount. So here our risk amount is $170, and the risk per capital percentage is 1.59%. Are there any significant economic releases that can impact the trade? So we already checked the economic calendar, so there wasn't any significant economic release. 7. Am I following the trading plan? Yes, as per my plan, our trade is completely based as per my plan. I already have applied all this trading checklist in my trade. Now this is the time that I place my order. So never try to hurry place any order at the market prior you have not checked your trading checklist. If you want to be a successful trader, never forget to apply the trading checklist for any of your trade. So now I'm going to place my order. If you are using Meta 4 or Meta 5 platform, then click on the new order. Then this order box will open. So here in the symbol, you see that it's Euro USD, and the type of order, as we have discussed in this lesson earlier, it is instant executions or market order. And then on the volume, it's already 0.2, so you can change it. For this specific trade, we use 0.2 lot. For the stop loss price, we use the already specified closest support and resistance level that acts as a stop loss and take profit. So you can directly place this price here in the stop loss. Make sure that you will write all the numbers, and our stop loss is 85 pips lower than the current price. For take profit, we'll use this price specified as a take profit, which is 238 pips higher than the current price. After you open the order box, so easily you can type your previously specified take profit and stop loss. Before you place your order, you have to fill the stop loss and take profit prices. But also there is another method as well. If you want to first place your order, buy or sell, then you can modify your stop loss and take profit prices. So here I will use the second method. First I will place my order, then I will modify the stop loss and take profit. So let's place our order. Now I'm buying. Now my order is already placed. I will bring the cursor on the buy level, and here the drag to modify option will appear, and then I will drag down the buy line up to my stop loss or closest resistance. Then the modifications box will appear, and here it shows that my stop loss is already taken, and then I will click on the modify and then OK. So here now you see that my sell or sell stop is already placed, and then in the same method I will drag the order lines toward my take profit after it reaches to the take profit level. So then this modify box will open. So now the both stop loss and my take profit is already placed. Click modify. So here in this trade my take profit is also placed. So here, as I mentioned at the beginning of this lesson, I'm trading as per daily candle. So I have to wait for few days until to see the result. Please stay with me, and I'm going to share you the result of this trade in this lesson as well. So now I come back to my trade. It's almost at the 4th day. So here you see that I'm in a good quiet profit, and it shows here at the bottom you can see $333.2 profit, and the trade is close to hit my take profit. You can see here at the left, this is the take profit, and here is the price that I bought, and here is the sell stop. So right now I think it's around 50 pips. I'm lower than the take profit, but I will wait to see until
the market hit my take profit. Thanks for watching this course until the end. So if you have any questions, so please don't forget to leave a comment, and I will reply your comments and answer your questions in the next lessons. And also please don't forget subscribe to our channel and hit the bell to not miss our future lessons.